Monita ma'am once again for taking this event, and thank you Sujata and the team for the nice introduction that we had. Now we come to the last part of our session, and it's called as Housie Quizy and Prizey. So you all would have been receiving one page with a pyramid on it. Okay, so this is the game we are trying to play, and I'll tell you one thing, that finance is a very boring subject for many of you, and everybody, I hope everybody have received this. If anybody has not received, please. Okay. So we all have. So finance is a very boring subject, and we have tried to actually gamify this subject using a concept of Housie. You all go to kitty parties and then you play Housie, right? So today you will be playing a financial Housie game, and we all have prizes for this. Okay. So let me put some instructions across. So there's going to be a question that's going to play it on the screen. A question bola jayega. And first you have to make a guess for that you have to answer those questions. And after making that guess, we'll also reveal the answer. And if you have the answer there in your sheet, please circle it. Please circle it or mark it. Okay? And the game will keep continuing, and we have prizes for the last line. For the last bottom of the pyramid, there are 3 prizes. Okay? And for the next pyramid, we have 2 prizes. And for the above one, we have 1 prize. Okay? So I'll just click this and show. So for this last line, you have 3 prizes. Line number 1. Okay? And then for 2, you have 2 prizes, and for 3 you have 1 prize. The 4th one don't have any prize, and there is an half Housie. So 1, 2, 3 is half Housie, and then you have full Housie, 3 prizes. Okay? So this is not a normal Housie game where I'm going to pick number 42 and you're going to write 42 in your chit. So this is, we are trying to explain finance in the form of a game. And I promise that post this, and I'll tell you the concept post this, that why did we play this game, and all of you who are going to go out of this hall, I promise that you are going to learn something from this and then go. Some of you will walk away with some prizes, and that is how we are trying to make this afternoon and much interesting afternoon. So this is how it is. So this is line 1. So we'll have 3 prizes for this. So we'll be keeping asking questions, and for whosoever 8 boxes are complete, you just have to tell 1. Okay, and then we have 3 like this. Yeah. Okay, and then for this you have 2 prizes. 2. For this you have 1 prize. For this there's no prize. So whoever gets this, no prize for this, and I'll tell you why there's no prize. Okay. And then full Housie, we have 3 prizes. Okay? Okay? So most importantly, all of you write your names on the sheet on the left hand side. Please write your names, because the person sitting next to you can actually take your sheet. So make sure that you write your name. Okay? Okay, all set? Okay? So some of you might have not understood, but once we go with question 1, 2, 3, you will understand this. Okay? So let's start off with this game. Okay? So we'll just start off with question 1, question 2, and question 3. Okay? So here we go, question number 1. So this is the question, and you have to make the guess. And then we'll also reveal the answer to you. It's not that you will have to make that guess. So the question is, equivalent to balanced diet when it comes to investment, what is that? Okay? Equivalent to balanced diet when it comes to investment, what is that? Like how you have balanced diet in your food. Discipline, no. Budgeting, no. Okay. So the answer is asset allocation. So if you have asset allocation, please circle it. Did you understand this concept? Clear? Okay. So if you have asset allocation, please circle. So technically the answer is asset allocation. So basically what it means is that like how you eat different foods like protein, carbohydrate, vitamin, same way in your investments also you need to diversify, and that is called as asset allocation. So you are trying to explain this to you in a very simple way so that you all understand this. We move on to the next question. Financial personality test that decides whether you invest like a daredevil or like your cautious uncle who still keeps cash in bank. What is that called? No, no, no. So that is called as risk profile. So when you make your investments, we do a risk profile test on you to see whether you can take high risk or you can take low risk. And unless you don't do a risk profile, you don't know what exactly you should be investing in. So we move on. You are retired and have a fixed lump sum. Now you want to create a regular income from that. What do you do? No. Yes, you invest. No. Systematic withdrawal plan is the right answer. And one more point. So as we reveal the answers, you can also check the previous answers on the top. You can see there on the right hand side. We have made these things very simple so that we save time. In case if you have missed out, so all the asset allocation has been called out, risk profile has been called out, and now systematic withdrawal plan has been called out. So whenever you retire and you have lump sum money, what do? You create a regular income, and that regular income concept is called a systematic withdrawal plan. Next question. Official documents that ensures your kids are cared even for if your life throws unexpected surprise. Make a guess. Well, no. Letter of guardianship. Whoever have children less than 18-year-old, okay, and when I talk this, I also sometimes become little bit more serious and I'll explain this to you. If you have children below 18 years of old, and if both the parents passes away, unfortunately the child becomes orphan financially also. So what happens at that point of time? So you need to write something called as a letter of guardianship, where you have to ensure that you appoint somebody as a guardian for your investments in your and your spouse's absence. Okay, fine. So I hope you all are marking asset allocation, risk profile, HWP, letter of guardianship in your slips. Okay. If there is any confusion, please ask us. The team is around to explain all of you. Next. What is the only insurance that you should take that ensures your family's security if you are gone? The right answer is term insurance. Some of you answered life insurance because it was there in your pyramid. But the answer is term insurance. You will all be bombarded with different form of insurance. कि आप ये LIC का ये ले लो, इसका ये plan ले लो. But the only insurance that you need to have in your life is term insurance and nothing beyond that. If you take any other insurance, somebody is taking you for a ride. Okay? Next. One expense that starts even before the child starts speaking. No. Child's future expenses. Before your child starts speaking, if you have a child, you know that the child's future expenses is going to come for you and hence you have to financially plan for it. The answer is child's future expense. Okay? Next. Process that help you evaluate your financial health just like you do an annual medical health checkup. Annual review? Yes, it's annual review. At Happy Investor, you all undergo an annual review that we do for you. So why do we do this annual review? To ensure that your financials are in place, like just you do an health checkup, same way we do this annual review. So is this interesting? Okay, are you learning? Thank you. A long-term investment plan that is sold in the name of insurance. Obviously life insurance. What happens when generally your LIC agent comes and tells that आप ये ले लीजिए, buy this, it's going to give you some guaranteed insurance. Unfortunately, you are buying a pack of insurance which will not give you any benefit in the long period of time. Hence, you need to avoid this. The superpower that helps you to spot good investments, avoid scams, and say no to pointless spending. No. Financial awareness. And that is what this session is all about. We are trying to make you financially aware that where you should not invest your money, where you should be investing your money, how you should invest your money. Okay? We move on to one. Always look at what do I get back in return for anything we do. What is this called for? Answer is right. You people have become very smart. The answer is understanding rate of investment. मुझे कितना मिलेगा? Somebody pitches you some investment product. What do you say? मुझे कितना return मिलेगा? Right? Understanding ROI. Okay. Number that decides whether you are living comfortably or just working to pay monthly EMIs. What is, okay, so this is a little tough, I'll answer this. Income to EMI ratio. What does this say? If you are earning, let's say 1 lakh rupees a month, you need to decide that how much should be your monthly EMI. And the ideal answer is about 35%. So if you are earning 1 lakh rupees, then your EMI should not cross more than 35%. Anything more than that is always a dangerous sign. Then when you have a job loss, when you have other issues, then you will be in a soup where you can't go and pay your EMIs on time. So always ensure that keep your EMIs under control. 35% of your take-home income, that should be the thumb rule that you should be having. Okay? Your money grows and then the growth also starts growing. Compounding. People will always tell you that simple interest में आपको 18% मिलेगा, you get simple interest, but always ensure that your investment should always be in the form of a compound interest and not a simple interest. We all go to our class 3 and understand that there is simple interest and there is compound interest. All your investments you have to look in the lens of a compound interest and not simple interest. What do most people start thinking only when 31st March is around the corner? Tax planning, very easy. Yes, tax planning. Ideally, tax planning should be done at the beginning of the financial year, in the month of April, May, June. But people call us in the last moment and say that it's January, February, March. I need to show some investment to my HR. Can you do something? It's not the right way to do. Sujata, maybe you could take out some questions? Yeah. I'll take one more question and then you can. A smart plan where you invest a little bit of money regularly like a monthly habit. SIP, most easier one. The answer is SIP. So SIP is a concept where you start investing on a monthly basis and that concept is called as SIP. In banks, you do something called as RD and in mutual funds, that concept is called as an SIP. Okay? Over to Sujata. So I'll hand over the stage to Sujata to take few more questions and I'll again come back at the last round again. Yeah, you take it. Go. Yeah.
So I'm back. So the next one, a document that helps you distribute your wealth even after you are gone. In the sense, pata nahi abhi mere baad kya hoga, so you decide before only where it should go. Okay? You all are getting smart. So our plan is working. A fancy term for how long you can resist touching your investments before you can give in to the temptation of taking it out. You know, I wish I could hold my investments for a longer time, but I want to take it out now. So when you hold it for a particular time, what does that call? It's called an investment horizon. I put the money for a particular time. I don't want to take it out before that. So that's the discipline we want you to have. A roadmap to a stress-free future which helps you to optimize your finances. No stress on your finances. So what would that roadmap be? Financial plan. Somebody said that here? The only person who holistically plans your finances professionally and make you feel happy that you have money. Deepesh Mehta. No, Team Happy Investor. The higher it is, the wealthier it appears. But it helps your money grow year by year. What is this? It's the compounded annual growth rate. He explained compounding some time back. So as it compounds, you need to see your average. This is like the cricket team's run rate, you know? So you have to see the run rate of your investments. That's what you check whether your portfolio is doing well or no. A principle that helps you manage concept of buy today and pay over a period of time. It's loan management. So you buy today and you pay over a period of time. So you manage your loan. Anybody having the lower line, middle line, third line, all numbers ticked? Please check with this list: asset allocation, risk profile, SWP, letter of guardianship, term insurance, child's expenses, annual review, life insurance. Nobody has ticked all boxes in any level? Okay. Strange phenomenon where your salary increases, but somehow by the end of the month you're still stuck, broke. Lifestyle inflation. We had popcorn earlier, now we want pizza. Lifestyle inflation. Financial haldi doodh. Khasi ho gaye, haldi doodh pee lo. That protects your wallet when you land up in the hospital. Health insurance or medical insurance. An unexpected event that not only affects the health, but also puts your bank's balance on life support. What kind of emergency? So this goes with your medical insurance. The tailor-made money plan that fits you perfectly, unlike the one-size-fits-all ready-made garments that we get. And personalized financial solutions that we provide at Happy Investor. You gain this when you are able to make your own decisions, because now you have learned how to manage your hard-earned money yourself. All of you feeling a little independent today? Or at least on the road to that independence? The slow and steady process of making money work for you, unlike get-rich-quick schemes that work only in dreams. Wealth creation. So you put in 10 and that 10 becomes 100, but it takes time. So it's a slow process. Sabar ka phal meetha hota hai. Housie.
Which line? So we'll have it.
Line 3.
Wealth creation. Just go back. Not a Housie, it's line 3. Wealth creation.
Wealth creation.
SIP.
SIP, yes.
Financial independence.
Yes.
Child's future expenses.
Yes.
Yes.
So line 3, first prize gone. Only one prize. So Aishwarya has called out for the third line. So that's one prize for third line. And we will have Deepesh's mother, Mrs. Mehta, hand over the gift for her. In case. Aishwarya. Thank you, ma'am. Thank you, Aishwarya. So the last one I called out was wealth creation. Anybody filled up line 2, line 1? Please check. So she's taken line 3. So now you get only full Housie. Okay? Kind of risk you take when you do not realize that you could lose your principal money permanently. I'm getting 2% more, I will put money there, but mera baki पूरा पैसा वापस आएगा या नहीं पता नहीं. Credit risk, which means you don't get your basic money back. Any examples of those kind of things that you know? The golden rule of investing that prevents putting all eggs in one basket. Line 1, line 2. Any expenditure in your life for which you cannot avail of a loan, an expenditure. An expenditure for which you cannot get loans. नहीं, बाकी सब के लिए लोन मिलता है. Expenses after retirement. आप रिटायर हो गए, अभी आपको कोई लोन नहीं देने वाला. Oh, okay. Where should you park your extra emergency fund after setting some amount in your bank account? Smart. Huh? Yes. Yes. Yes.
Financial advisor.
Yes.
Mentioning ROI.
Yes.
Asset allocation.
Yes.
Financial awareness.
Financial awareness. Yes. So that's bottom line. 1. Who do I call? This is for the baseline. And this is Sangeeta. So, congratulations. अभी आपका सिर्फ full house. Yeah, and we have 2 more prizes on the third line because that's the base. So 1 is gone. We have 2 more. Yes, for the bottom line. Just like you store adequate salt in your house, what should you always have in your bank? नमक हम किसी से जाके लेते नहीं हैं, so your emergency funds should always be with you. The age-old saving methods where friends pool in money and one person gets to take it in advance, but sometimes all of it disappears. This is credit risk. Also, example of credit risk. Deciding ahead of time how to spend or save your money. What is this concept? Yes? Oh, there's one more there, one more there. Which line is this?
Line 1.
Line 1, okay. Budgeting, annual review, financial plan, loan management, financial solutions, asset allocation, yes. This is Apeksha. Please come forward. Apeksha, please. Thanks, Apeksha. Monal. Here's your sheet. And you're eligible now for the full house. Monal, congratulations. Here's your sheet. You're still eligible for the full house. Okay? So the first line, 3 prizes are done. The third line, 1 prize is done. We have 2 prizes for the middle line, 3 prizes for full housey, and 2 prizes for 1, 2, 3 lines together. So those who've already got prizes, you're eligible only for the full house. So we finished last with budgeting. That expense which we justify as self-care, but actually it burns a big hole in our savings if we have not planned it properly. Chutti, vacation. We all want to go, but we don't plan it in advance. If we plan it, then it's really nice chutti. Otherwise, we come back with nothing in the pocket. Women generally tend to save, but forget to invest. वो kitchen का बर्नी में everybody keeps saving it, but I think we are moving ahead from that now. Invest, not investment. Simple step that ensures your hard-earned money goes to your loved ones, and not to the bank's unclaimed funds department. Nomination. Please ensure nomination to everybody on all your assets. Yes. Gautam, check. Which line? Second, middle line. Read. So done.
Ajay, you start
Lakshmi. That's Lakshmi Krishna Gaura. Thank you for being there today. You are still eligible for the full house. The option promises higher returns if you stay for the long term and not bother about what happens in between. Equity. Equity mutual funds. Currently market, don't look at the market right now. Look at it 2 years later. A loan that says you owe me this much now, but pay only little now and then puts you in a long trap. Credit card, loan. So when you don't pay your credit card bills in full every month, that takes you down the rabbit hole. Credit card loan, not credit card. The safety net that ensures a sudden mishap doesn't drain your savings because let's face it, life loves throwing lots of surprises. It's a personal accident insurance. Suppose you break a leg, can't go to work for 6 months, what happens to your salary? After leave, it's all gone. So this ensures your salary comes to you, even if you don't go to work. A type of mutual fund that is similar but more efficient than an FD. You are excited about your new decision, but you are also worried about the fuel prices. For what you're planning. Car purchase, yes. Car purchase. No, car purchase. Alternate to buying actual gold without worrying where to keep it safe. Gold funds. A long-term commitment you make sometimes even before committing to marriage. Home loan. Second line. Wait, first check hers. Yes? Sorry? Second line. Home loan. Yes. 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 Who's that? Yeah, who's that?
Tina.
Tina, come. That's Tina.
This one, let me explain.
Tina, your sheet. You're still eligible for the full house.
Keep like this and show.
Okay, now all these lines, the individual line prices are over. But if you get to complete all these three, that's a mini Housie. So for that, we have 2 prizes. Okay? And for all the 4 lines, we have 3 prizes. So I'm assuming first we will have these 3, and then only we'll be able to go to this. So it also depends on who calls out first, okay? So please be loud. Whose is this? That's okay. The one thing in India that people always dream that they should have. Yes, own home. Financial pit stop you take to drive your dream wheels without emptying your savings. That's the car loan. So we had car purchase first, now it's the car loan. A barometer of India's stock market performance. Stock market performance. Yes.
Back. So semi-Housie is done. So Sujata, can you just check this? Semi-Housie, yeah, mini Housie. Thank you. Okay. So we have 4 more prizes left. So 4 more prizes to go. So one prize for this, you have a bottom layer, this layer and the other one. So there's whoever calls this, whoever this happens, please call up. And then we have a full Housie. So the person who gets half Housie will not be eligible for full Housie. Okay, fine. Now it will be very interesting. Team Happy Investor, please be around. Please go and spread yourself. And this is the final match. So most of you will be calling out with your answers. Okay, so we go with the next question. Magic plastic that makes you feel rich for 30 days before reality hits. Credit cards, right? You feel that you have something magic in your hand. You go and you swipe, do shopping. At the end of the month, you have to go and pay the bills for that. The risky lending habit, where your friend borrows money and promises to return it soon and then magically forgets. Hand loan. Okay. Please watch the answers here and also the questions. Please pay attention, because if you miss out this, then we will not be responsible in case if you are calling out late for your houses. The protection plan that ensures your house is safe. Property insurance. So, okay. So property insurance is that insurance in case if your house has some natural calamities, floods, then you need to take a property insurance for that. So what is this? Semi-Housie. So SIP, compounding, financial independence, expenses after retirement, lifestyle inflation, home loan, medical emergency, accident insurance, property insurance, credit card. No, we only need two. Then debt funds, CAGR, financial plan, budgeting, personal finance solution, asset allocation, financial advisor, investment horizon. Yes, Unnati Vinay, please come on stage. Yeah. So, ma'am, you can actually come. Though you have written your daughter's name, but I know technically. Come, please come. Along with your daughter. Manisha, please come and. Ajay? Okay, fine. Go ahead. Thank you. So people who have got half Housie are not eligible for full Housie. So now we have 3 houses, and that is where the finals we will be seeing. So full Housie is where you complete all this, and then we'll be checking this. So let's go. Watch. You paid ₹10 for a liter of milk earlier in your childhood days, but today you are paying ₹42. Why? Inflation. That's inflation. So 10 years back, for a kg of tomato, you are paying ₹20. Now you are paying ₹40. For any fruits, vegetables, you are paying ₹10, ₹20. Now you are paying in hundreds. And that's called as inflation. And the whole premises of making your investment is that you should actually be earning more than inflation. Unpredictable drama series where everyone hopes for a blockbuster returns, but usually it's a flop. Stock trading. Generally, everybody I see saying that मैं stocks में डाल रहा हूँ, मैं बहुत पैसा बना रहा हूँ, ये बना रहा हूँ, but SEBI comes and says that 92% of people don't make money in stocks. But everybody feels that I'm making money in stocks. In reality, hardly people make money in stocks. Losses are always private. Profits are always public. Financial reality check that tells that if you're saving enough or just funding your next shopping spree. Saving to income ratio. So, there's a thumb rule that if you are earning 1 lakh rupees or 100 rupees, your saving should be minimum 33% of your take home income. So, there's an Housie. So, we'll cross check. Chit funds, credit risk, Sensex, SWP, child's future expense, vacation, life insurance, car loan, nomination, letter of guardianship, medical emergency, emergency fund, Annual review, loan management, budgeting, diversification, investment horizon, ROI. Okay, fine. Yes, Hemashri J, please come on stage. Yeah, yeah. Sujata, you can give. Hemashri, please come. Please take this. So we have two more houses. Yes, two more houses. Please pay attention. Okay, two more houses. The digital currency roller coaster that is not an official currency. Done? Suman Kalyani, it's done. And Neetu Yan, okay, credit card loan, inflation, vacation, car loan. Yes, we have two houses done. So, thank you. Thank you. Neetu, yeah. So, now that we have done full housing, okay, we have a wild card. Don't get disappointed. So, Manisha, please. Yeah. Okay. So, because you're all interested, we thought, ma'am. Okay. So, we have a wild card. So, though three houses are done, we thought we'll have one more housey. Okay, yeah. So we have one more housey, so don't throw your papers. So we have one more housey. So I knew that people would be excited. So I think, ma'am, you had completed that. Please come, ma'am. Okay. Okay. Sapna, this one. So welcome, Preeti. So thank you, ma'am. So he's my son, Divit. Okay. So there are two more surprise. So we know that you all will be excited. So finally, you have two more houses. Okay? Okay, so don't get disappointed. Keep your answer sheets. I know you all love surprises. Okay? So we have two more houses. So we go with the next question. An unexpected break in your career which upsets your finances and future plan. Job loss. Housie? Okay. Okay. Yeah. Photo liya? Yeah. One minute. We'll take a photo. One. Thank you. Thank you. Thank you. Okay. Game is done now, but please don't throw your sheets. We also have some more information on this. So officially, I would say Housie game prizes are done for now. So we had a lot of elements and surprise. Pooja, please help me to change the slides. Okay. So I'll tell you what is the relevance of playing this game. Please pay more attention towards this. And this is very, very critical. And the whole purpose of having this game is to make you explain the concept of investments, which we will explain this to you here. Yeah. So we'll just have the slides in a couple of minutes here. So by the way, how was this? Was it fun? Okay. I'm sure some of you might didn't have a great luck today, and that's how Housie game is all about. And we wanted to make sure that you took the cards. Right? We didn't give you. You actually picked some of these. So it's your luck. You had done the choice. Okay. So let me come to the final part of our presentation. So at Happy Investor, what exactly we do? Don't throw your sheets. So you see, this is a cake. So what does this cake do? So how do you actually bake this cake? You don't actually put the cream first, right? You actually have the base cake first, and then on that you put some cream, and then you put some cherries and some wafers and something on the top. What happens if you actually just put only the cream and the berries on the top? What happens to the cake? It would fall down, right? There's no base for it. Similarly, this is where the base stands. Similarly, in your investments, if you don't have this planning and foundation right, now look at your sheets. Okay? You would be having some similar names there. if you don't have a proper risk profile, don't have proper discipline, don't have a proper financial plan, don't do tax planning, don't do annual review, don't have investment horizon in mind, then you will really not be able to make money. That's the first message. Okay? So what people do, generally they say, मुझे highest returns चाहिए. I ask them, do you have a proper health insurance? They say no. Do you have a life insurance? No. Okay? Is your loan management in order? No. What do you want? Highest returns in my life. So that's not the right way to actually approach things. The second comes is risk management, where you have a proper term insurance, medical insurance, you plan appropriately for job losses, you ensure that your EMI to income to EMI ratio is in proper control, that you do that. And then you do your financial goals, like you do a car purchase, home purchase, ensure that you have proper things in place, and then you plan for your child's education, child's future. And then finally you go and you do some riskier investments like speculation, like stock trading, chit funds and other stuffs. What unfortunately people do, people go and put their money in chit funds thinking that that's going to give them the highest returns, or play in bitcoins, do some stock speculation, give money at 3%, 4% interest a month. If you are only doing at the top, and if your cake is not solid enough, your financials will strong in case if there's a job loss, if you lose money during any critical medical emergency. And hence, we thought that we will explain this financial plan concept in the form of a game and try to tell you that please make sure, like how Vanita ma'am explained on the basics of wealth, we thought that we will have this explanation of how you actually have to manage your money. Today, people who have one Housie is because, their financial pyramid was in order. Not that in reality your financial life is not in order, but the example that we wanted to set is that we had 3 prices for the bottom base, because if your base is strong, you'll always have enough money to cope up any form of emergency. Okay? And then we talked something about our growth in the last 5 years. So in January 2020, we were managing assets worth 86 crores. January 2021, we were managing 127 crores. We had a 48% growth in the COVID year. And January 2022, we managed 190 crores. We had about 49% growth. Then in January 2023, we were managing 250 crores and the growth was 30%. Then January 2024, last year, we were having 370 crores worth of assets. And as of now, we manage about 525 crores of assets, and last year we grew at 42%. And all this was possible because we believed one simple formula, that educate people and then make sure that you take their investments. So whenever you came to us, we educated you saying that what is right. If you had gone into some wrong investments, then we told that you have to come out of this. And that has led to a stupendous growth, which you could see here. And this is how we have been growing. And we promise that we'll be adding more financial literacy in the coming years. And today together, coincidentally, this was just 2 days back that we totally have an SIP book of about close to 5 crores. So that means each month, all happy investors client put together invest about 5 crores every month. And imagine in investing so much of money at this point of time when the markets are down, the kind of wealth that you will be creating over a long period of time will be hugely beneficial for all of you. And for this, we will also be having a small celebration along with you once I complete this. So this consistent growth is enabling us to deliver quality service. And my last 2 parts, this is very interesting. So we have 3 Indias. Are you able to listen? Yeah, okay. So fine, it's fine. So we have 3 Indias. So there is one India. So there is one India who is earning less than 1,65,000 per annum. Now this is a data from income tax. Okay. So there are some set of people who earn less than 1,65,000 rupees per annum. That's your driver, maid, your servants and other peoples. Then you have the second India who is earning between 1,65,000 to 4 lakh rupees per annum. And there is a third India who is earning more than 4 lakh rupees per annum. Okay? 2015, if you actually look at the actual numbers, 110 crore people, that's 90% of the population, were earning less than 1,65,000 rupees per annum. And 10 crore people were earning about that blue color, which is about 10 crore people were earning about 1.65 to 4 crores, and about 2.5 crore were earning about more than 4 lakh rupees per annum. Come forward in 2021, the middle layer of the pyramid shrunk, increased, and it has now become to about 40%. So what is happening? The lower segment of the pyramid of the people are actually earning less, and that has been translated to the middle segment. So now in 2021, 58% of the people are earning less than 1,65,000, and this shift has gone to the second base. In 2025 today, about 38%, only about 53 crore of people earn less than 1,65,000, and about 82 crore people are earning more than 1,65,000 to 4 lakh rupees per annum, and the top remains the same. It's not growing, which is good. So what is happening? The shift from lower middle class to upper middle class is happening. Okay, and I'll tell you how it is relevant to you. So, in 1992, all your houses had this, a big TV, a fan and a bulb. Correct? 2007, that's about 17 years back, we had one cooler, a fan, and then a LED lamp, and this is what we had. 2017, people started buying LED TVs, a blender, a fan, a microwave, and cooler and other stuffs. And then in 2025, now people have a mobile phone, a vacuum cleaner, a washing machine, dishwasher, and phone, AirPods, iron, and other stuffs. You see how this consumption has actually changed from 1992 to 2025. And this actually is resulting in a wealth creation for you. So, if you look at this, India has about 4% of Indian population drive car, 6% of the people go outside India, only 8% of the people have ACs, 18% have refrigerator, only 58% are internet users. Compare this with China and USA. 15% of China drive car, 81% of US population have a car. So, what USA was in 1960 is what India is in 2025. What China was in 1990 is what India is in 2025. Now we all know that every household says, "Nan maga America hogbeku." Right? Why do they say? Because large money is made over there. The next few years will belong to India. The next 10, 15, 20 years will belong to India. All that you have to do is that stick to your investments, and all the wealth that you have created in the last few years is because that the middle class, the lower middle class is actually spending money, and you as an upper class are actually investing money, and that investment is translating to better growth. So India's growth story will continue for the next few decades, that's for sure. And finally, this is a very interesting slide. So all of you have this goddess deity. So anybody have a goddess with just only Lakshmi and no Saraswati and Ganesha? Why is there always a Saraswati and a Ganesha next to Lakshmi? Knowledge, right? So you all have Lakshmi in the form you do a job, salary, you all have that Lakshmi. But if you don't have a Saraswati, your Lakshmi will vanish. So we at Happy Investor are trying to create that form of Saraswati in the form of imparting financial education to you so that the Lakshmi that you're earning stays with you for a longer period of time. So the day is not far in India where number of women mutual fund investors will be higher than the number of people investing in fixed deposits. And hence, our advice is that stay invested. A lot of wealth creation is going to happen in the next few years. I'll again hand over the mic back to Pooja. Please come, and we have few more minutes before we call for the day.
Thank you, Deepesh. That was a wonderful session. Now, you all have that Housie answer slips, right? I request you to make the rocket out of it, the paper plane. Yes. Before that, before you make the paper plane, I have one more task. How was this event? How was Vanita's session? How was Housie Quizy Prizey for you? What did you learn about it? One word, two word, one line, two line, however you want to describe it with your name, please write it on the back of your answer slip. You guys are so engrossed writing it. Did you love this session? Obviously you did. There's no doubt in that. How teaching you how to do it? I'll hold this.
Yeah, so you have to hold this. Okay? And then you fold this. Okay? And then one inner fold. Okay? And then one more fold. Okay? You all remember that in school you were doing some masti. So you have to get this rocket done. Have fun on a Sunday and then just fly this. Okay? Stand up and then just fly this. Okay? We are going to pick this. Team Happy Investor is going to pick this and then read all the feedbacks that you have for us. And we'll take this as an improvement for our next session. So this is going to be a good exercise, ma'am. Vanita, ma'am, we are contributing to your exercise that people are throwing their, yes. Team Investor is picking up. Please throw, have fun. Please. And we are going to read this, implement this, and that's how we call for the day. And before that, I hand over this to Pooja.
I think now that's enough. बहुत ज़्यादा मस्ती हो गई यार. Okay, we will collect the paper planes from you. The team Happy Investor is going to collect the paper planes from you. From the last row, I want 2 ladies to please come on stage. From the middle, I want 3 ladies to please come on stage. From the first, I want the 4 ladies to please come on stage. Anybody who is interested to be on stage. So we are going to have a small cake cutting session, and we want to celebrate that with our women clients, our investors. Yeah, it is a hard goodbye today. I hope you guys had a wonderful time. Just one last time, I want to know how good the time was. How's the Josh? No, I still can't hear you. How's the Josh? From here? Okay, so we really had a good time. Thanks to Vanita for this wonderful fitness session. Thanks to Team Happy Investor. Thank you guys for being here. I know it was a Sunday morning, you had something planned, but you made sure that you may be part of it. Thank you so much once again. And yes, this is Team Happy Investor. We'll click a few pictures. If somebody wants to please join, please come on the stage. Thank you once again. And please don't forget, we still have 2 prizes left for the best photo booth picture, which is being placed outside. Go take a picture outside with the wings, which is there. Click as many pictures as possible in a group, in a single. Best 2 pictures are definitely going to win prizes. Do tag us on social media. Just clicking pictures is not enough. Do tag us on Instagram, Facebook, LinkedIn. We are present all over. Tag us, and best 2 pictures are going to win the prizes. Thank you once again.